Hi, good afternoon, everybody. Welcome back to Series 5 of the Climate Pioneers Show, Funding a Better Future. Throughout the course of this series, we are focused on angel investing for impact, digging into why angel investment is such an important part of the early fundraising journey for a founder, and how they can be best prepared for the challenges they may face along the way. We're also exploring things like the lack of gender equality in the world of angel investment, why climate is a wise investment strategy, and how you could begin your own angel investing journey. So whether you're a founder looking to raise angel investment, or whether you are an aspiring investor yourself, there should be plenty for you to get stuck into throughout the course of this series. If you've missed any of the episodes so far, this is episode 4, so we've had 3 previous episodes. You can catch up with those either on LinkedIn via my profile, or on the Above and Beyond YouTube channel, or in podcast format on Spotify, Acast, and our Apple Podcasts. Today, we are joined for episode 4 by Cam Ross, CEO of Green Angel Ventures. According to Sifted, Green Angel Ventures was the 3rd most active investor in clean tech in Europe. And Cam himself is an investor in over 20 climate tech startups. So he knows a few things about investing for impact. So Cam, thank you so much for joining me today.
You're most welcome. That's some lead in there. Apparently I know a few things or two. So we'll get stuck into a few of those, I'm sure.
We will, absolutely. But to kick off, Cam, are you happy to kind of talk us through your journey, I guess? Because people listening to this will be perhaps thinking about investing themselves for the first time. And I think it's always useful to hear the journeys of other people and how they found themselves in that world. So what was your journey into it?
Well, yeah, that's really interesting. I mean, where I've ended up is as you say, I'm the CEO of Green Angel Ventures, and we only invest in companies that are fighting climate change in some way. But my personal history has nothing to do with that. I don't have a background in investing. I don't have a background in fighting climate change. I in fact have a background in engineering and science, and started a small business myself with a co-founder of mine, which we built up over the course of 12, 15 years. And along the way, and I think this is really important for my personal contribution to what I'm doing today, is we raised a couple of rounds of business angel finance ourselves to help grow that business. And what we personally got out of that was some fantastic involvement from non-exec directors, investors who wanted to help us grow that business. Now, that wasn't in the climate space, but that lesson or the input and the involvement from those people was so important in helping us grow that business. Maybe about a decade ago, we were lucky enough to then sell that business to a stock market listed company, where me and my partner and all of our team sort of stayed then working for 7-8 years afterwards, because we were really doing a great amount of fun things actually with that new business. But maybe about 6 or 7 years ago, I decided I wanted to do something more in the climate space, make more impact. My family was growing, my kids were approaching teenagerhood, and to be honest, I was really worried that one of them was going to come home and say to me, "Hey, so Dad, what have you done to help the climate crisis today?" And the answer was nothing. and that sort of progression of my family. My wife moved into a sustainability job around the same time. I just wanted to get into this space. And I found what was then a very young startup business, which today is Green Angel Ventures, and got stuck in. So here we are.
Amazing. So really interesting then that you actually went through that angel investment journey from the other side and saw the benefits of that process and how crucial that source of funding is as a founder.
That's right.
Yeah, amazing. So 7 years then you've been with Green Angel. How have you seen the world of impact investment change over the last 7 years?
Yeah, that's really interesting. I mean, we started out as quite a small collection of angel investors, maybe 20, 30, who were collectively looking for companies in which to invest. And all of those companies needed to fight climate change in some way. Today, we have quite a robust measurement or metric around what that actually means. But early days, it was a great collection of individuals looking to make that investment. And I think from our perspective, how things have changed over that time is, firstly, public awareness of climate impact and climate issues has of course, across every part of our lives, our personal and working lives, has really expanded that sort of awareness. And along with the awareness has come people's desire to actually want to make a difference and make a change. And so what we've seen is people with money that they could invest in generic or non-targeted investment opportunities are actually turning more to making a specific contribution, not just to something that could give them a good financial return, but also can actually do good with their money as well. And so one of the phrases that we've sort of developed over that time is that we're hoping to make people's money work twice, once for them and then once for the future as well. So that to me is a sort of holistic approach of how people's attitudes have changed in an investing space over time.
Yeah, amazing. I love that. I like that phrase. That's great. And so generally more appetite then, as awareness of climate change as a big existential crisis has grown, so has the demand for people wanting to put their money to positive use. I love that. And in terms of those returns, you say, you know, to make your money work once for you and again for the climate. In that once for you piece, how robust an investment strategy is climate? Is it something that people are doing largely altruistically? Is it something people are doing, you know, in terms of it being a savvy investment strategy, or a bit of both? And can you speak about the returns and why you would consider it to be a strong investment strategy?
Yeah, I think our overall sort of belief is that it is the greatest crisis that mankind or humankind has brought upon itself, and it is something that we collectively need to resolve. If we don't resolve it, it's an unbearable future, an unbearable thought, and therefore it will get resolved. And inventions, technology, process, application will solve this crisis, and therefore it represents a huge economic opportunity. In other words, the companies that are bringing forth the technology, inventing these processes and technologies that we will all need across all parts of our personal and working lives to solve the climate crisis, those companies that are most efficiently dealing with carbon and other greenhouse gases are the ones that stand to make the biggest economic returns as well as the biggest carbon impact. And so some of our investors do this a little bit altruistically, you know, like they could put their money into X or Y, but they choose to put it into maybe our EIS climate change fund because they know that alongside their potential financial return, they're making a climate impact. But honestly, most of our investors are looking for both a financial return and a climate impact. And they're not doing it as, philanthropy. They're doing it as an investment and wanting to encourage those early stage technologies and processes that we need in order to kick along much, much faster the fight against climate change.
Absolutely. Yeah, because as you said, the scale of the problem requires a large solution, and a large solution should bring with it, you know, a significant economic return as well as, you know, the philanthropic benefits.
Yeah, and I think if I can say a little bit more about that, you talk about the scale of the challenge here. 2 or 3 years ago, with his US climate envoy hat on, John Kerry said memorably that 50% of the technologies that we need in order to fight climate change haven't been invented yet. And so, you know, yes, there is certainly the ability for us to turn the handle faster on solar, to turn the handle faster on wind power, to turn the handle faster on those technologies which are out there and are maturing. They certainly haven't matured, and there's a lot more to go. But then there's a whole host of stuff that we just haven't tackled yet across all of our lives. And that's the area in which Green Angel Ventures focuses, is finding and progressing fast those technologies to tackle, as you say, the huge scale of the problem that we have across everything.
Absolutely. And whilst the potential for returns on that you can see is huge, of course, inherently, there's also going to be quite a lot of risk, right? Because like John Kerry said, a lot of these technologies haven't been invented yet. So a lot of this stuff is first of a kind, and they're solving new problems and coming up with new things that could be huge, could also not work. So how, from an investment perspective, if people are concerned about the risk, how do you at Green Angel minimize that risk factor? Or how could you advise other people to help minimize that risk factor in their investment activities?
Yeah, great question. And I think it starts from the understanding that we are investing in really early stage startup businesses, which have a high propensity to fail. That's because they haven't got mature business processes. They may not have a robust customer base, a revenue stream for those businesses. And, this is inherently a very risky area in which to invest. How we try to mitigate that risk is by using a combination of the processes and systems we have developed internally over the past 6 and a bit years that we've been funding these startup businesses, But most importantly, we have a network of more than 300 specialist members of our angel syndicate. And those specialist members bring to the table their background, expertise, experience in most of those people. They work in, or they have worked in, the areas in which we invest. So when we're looking at an investment opportunity for, I don't know, thin film solar, we know that we've got 5 or 6 people in our group of 300 plus that we can go to, and we can say, hey, you're an expert in this field. What does this look like to you from a technology perspective, from an IP perspective? Someone else is an expert in team dynamics. Someone else is an expert on legals, cash flow, market, competition. And we use all of these people to spread their sort of collective individual wisdom, if that makes sense. In other words, they take their speciality, and everyone uses each person's individual speciality to make a small group decision about whether this is a sensible investment to make or not. And we have found historically that that's a pretty robust way of making a decision on these other what are still are inherently risky startup businesses, but really trying to mitigate the risk early days.
Absolutely. Okay, so sort of pooling that communal expertise that you've got within the community, and then using that to minimize the risk, as much as possible. So it sounds like then anyone kind of coming into this space as an investor, joining a syndicate like Green Angel would be, as I have done, would be a great strategy for being able to kind of minimize the risk that they might have in terms of their investments, and not just relying on their own due diligence, but be able to kind of harness the due diligence and expertise of everybody in that syndicate.
Well, I think it's important to say that the people who join our angel network are typically high net worth individuals, and they need to be taking their own investment decisions about whether they invest in company X or company Y. What we're doing is we're building a process around that so that they do have access to a data room, the due diligence materials, the reference calls we make collectively with that group, and they can access that and make their own decisions. There's a whole extra chunk of people who invest with us through our EIS Climate Change Fund who don't make their own investment decisions. In other words, their money goes into a pot which is invested across all of the companies in which our angel members invest, and that's a more passive way of doing it. But they're still utilizing the systems and processes of that underlying DD mechanism that we put in place.
Wow. Okay. And how do you assess or diligence companies for their climate impact or their carbon reduction impact, as well as on the returns and the risk and all those other metrics that you would expect? What do you do on that impact side?
Yeah, I think that's really important, right? Because our rationale here is we've got to make really good climate impact. So how do we judge that? And if you imagine, it's very different judging the carbon impact from a solar company versus a company that has a website that recycles clothing, that sort of thing. So it's very disparate. We have the fortunate background of a number of people in our team who have developed mechanisms and metrics for analyzing the carbon impact of all those different portfolio companies that we have over the past few years. We publish our carbon impact report every 6 months on our website. And you'll see in there the methodologies that we use for each one of those portfolio companies. Now, when we take in a new company and take an equity stake to invest in that company for the first time, we need to develop a methodology for that particular business. And that can take a little time, actually. There are some companies in our portfolio where we've taken a year or more to get to that point where we're confident enough that there are metrics in place to be able to track that. But really, when we're investing in a company or looking at an investment in the first place, we just need to see ballpark order of magnitude that when this company is operating at scale, it will have, and this is sort of air quotes, really good carbon impact or climate impact. And we're not worrying too much about whether we're 5% out on those figures one way or the other. We're after a sort of order of magnitude, which you can get pretty roughly from good engineering and science work to start with.
Yeah. Brilliant. So you sort of have a bespoke methodology per each company once they're actively within the portfolio to assess them for impact. But then prior to an investment being made, you just want to feel a sort of sense of assurance or confidence in the potential for them to achieve a tangible kind of
Yeah,
impact.
and I think that's fair. And we're very transparent about how these calculations work. And we've seen some other companies out there who like to claim carbon impact for the whole life cycle of that company for the next 25 years in the future, which seems a bit strange to us. What we're really grounded in is a bit more practical approach, which says this year we have done X, as opposed to for the next 20 years it's going to be so fantastic. Actually, let's just concentrate on what's actually been achieved.
Yeah, that makes absolute sense. Absolutely. And as we said earlier, there's sort of more and more people that are interested in investing in this space, right? And when I was researching for this episode, I could see the cumulative number of unique investors into the impact space is going up year on year on year. You know, as this existential issue becomes more and more visible, more and more people want to invest into it, right? And not just on an individual level, but at a kind of institutional level as well. So the amount of existing funds that are diversifying into climate, the amount of new funds that are being set up means that, you know, there's just this growing pot of money. But how does that affect the market for existing investors? Because obviously that's great for founders and that's great for the planet, right? But is that a good thing from an investment perspective that there are so many more active investors in the space?
Yeah, well, let's start with the last point you put first, which is it's great for the planet. It is absolutely, and much, much more money needs to go into this space. You know, quite often we work with co-investors to invest jointly into a new company, and that's absolutely fantastic. Every time we can convince a funding entity out there that may not have invested in climate before to jump on board and co-invest with us into the companies that we're funding is a real win, because it's getting money into this space where it's so desperately needed. It's true that in the last couple of years, and if you look at some of the US stats for in particular, that there's a lot of what the industry calls dry powder. In other words, funds that have raised money and not deployed it yet, particularly at the much larger investment sizes. So your sort of Series B, C, Ds, tens of millions of dollars or pounds. That's not so much the case for us in the really early stage. So we're talking seed rounds to A and B here. And really there is a shortage of investment in this space. So we're not seeing funds that have been raised and not deployed. Rather, we're seeing companies come to us saying, we haven't got a lot of alternatives out here for funding, for growth, for investment into our technology, process, whatever. And that's a real shame, because these companies, full of bright people, clever ideas, great IP, they need the funding in order to grow, to make that climate impact that we need over the next 5-10 years.
Yeah. So actually the prevalent or the increasing amount of investors in space is only a good thing, right? Because
everyone should get into it.
Amazing. And so from a founder perspective, wanting to raise angel investment and wanting to raise angel investment through Green Angel, or thinking of approaching Green Angel, what does an ideal company, investment portfolio company, look like for you?
What a nice question. Thank you. Yeah, I mean, specifically what we look for is three different things. The first one, not surprising, which is that at scale, this company needs to have a sizable climate/carbon/greenhouse gas impact, and we can help those companies to understand how that might be measured, as we've discussed. The second one is that it needs to have the potential for a good financial return. We're not talking about charity here. As we said earlier, our investors want to see the potential for a good financial return for their money as well. And the third thing, which is really, really important to us, is can we find 2, 3, 4 people in our angel network, in our community, to help those companies to grow? So go on the boards of those businesses, actually contribute work and time per month to help those companies face the rigors of growth, upsides, downsides, opportunities, bad days, to help them grow. And we lay all of those out nicely on our website, so companies can go there to greenangelventures.com and click on the raise button if they want to see the criteria that we have for helping those companies in those 3 ways as they grow.
Amazing. And if you don't satisfy that third point, would you still invest? Or would you still invite them into the diligence process?
Yeah,
and force people that could do that. Like how if there's a disconnect there, what happens?
Yeah, so I mean, I can take that question in one of 2 ways. The first way is, like, are we making a big enough investment to justify or be granted, if you like, a seat on the board or an observership to help those companies? And in some cases, we're not. I think the smallest percentage that we own of one of our portfolio companies is measured in less than 1%, right? So we absolutely at that point would not and wouldn't want to justify a board position. But the other way to take that question is much more interesting, I think, which is, what if we don't have a specialist or two in our angel network? Would we still invest? And I think the answer is really categorically no, because we are using the expertise and the background of our wider membership plus our paid team of 20 people to be able to make that investment decision in the first place. And so if we don't understand about it, if we don't have those experts there, we just will say, we're really sorry, but we can't take a sensible decision about whether to invest in your business or not.
Fair enough. Yeah. And when it comes to the founders preparing or being at a stage of readiness to come to you, so you mentioned there about the carbon or climate impact of the business and the financial returns, but at what point in their kind of maturity as a business would you feel they were ready? Because we talked very early stage here, so pre-seed, seed stage. Yep. But are there certain indicators, are there certain milestones that you would expect that they would have hit before they should be approaching you, or to be at that right level of readiness?
Yeah, I mean, two things I'll say on that. The first one is it's never too soon to start a conversation, right? So quite often we get companies approaching us and they haven't got a customer, they haven't got a revenue stream, they've got a cracking idea. It might be at a particular technology readiness level, which isn't very advanced. And what I'd say to those people is, please start talking with us, because in 6 months, in 12 months, when you really need that funding raise, we can be there. But the sort of technology levels or revenue that we typically like to invest in is first customer or two customers, where there's actual demand from the market there. Green Angel Ventures plays a critical role in the whole funding timeline of a company. So there are entities out there who will fund really early stage, sort of maybe 50, 60, 70,000 pounds small investment when it's kind of two people and an idea. We tend to kick in at the phase where there is a customer or just about to be a customer with a revenue timeline, with a revenue stream coming on board, through to quite mature businesses who have well-established customers, well-established technology, well-established positions in the market, and who are looking for that growth or scaling to the next phase. Just a little mini plug, I guess, from me is all of that sort of stuff is set out on our website, greenangelventures.com. People can go and read that, the sort of investment criteria that we have.
Amazing. And if you think about the companies that are in Green Angel's portfolio, and indeed even in your own portfolio, are there certain patterns, certain trends between those that have outperformed what you've expected, or those that maybe have underperformed what you might have expected?
Yeah, what a nice question. I think so. We're just about to cross the boundary of having 50 companies in our portfolio, right? So that's a really good size portfolio where we can start seeing trends. If you were talking with us a few years ago and we're looking at 10 or 12, it's much more bitty. So we've invested in consumer products, we've invested in technologies, we've invested in licensing, we've invested in software, hardware, a lot of different areas. What we're deliberately trying to do is to get that balance, right? So just not focusing, for example, only on EVs and batteries. That would be far too specific for us, because we want to have a good spread of risk across different technologies. But our mantra is that every part of our lives needs to be decarbonized. And so we will be investing in water pollution, air quality, all these sorts of things that are deliberately, linked very heavily to emissions and carbon. And no, there is not one particular sphere which has outperformed or underperformed. Actually, we see a broad advance across all of our companies. The way that we measure that is looking at the share price of those businesses. So although these companies are not listed, so their shares are not liquid or they're not traded, actually the way we value our portfolio is looking at the share price that was paid in the previous round, even if Green Angel Ventures didn't participate in that round. So what's the latest investment been? And we've seen good steady growth across the broad portfolio over the last 6 or 7 years. The final thing I'll say is that's the sort of timescale on which we're investing. So people shouldn't come in expecting that they can invest now and suddenly get a return in 6 months' time. What we're after here is underpinning the technologies that will grow over a sort of 7 to 10 year period. And people should expect that that's the length of time that their investment is going to be locked up before there is some sort of exit or liquidity event in the 7 to 10 year type timescale.
Yeah. Okay, so sort of five to 10 year. Would 10 year be too far, do you think?
10 years not too far. We just don't have any 10-year investments yet because we've only been running for 6.5 years.
Fair enough. So looking at that longer time frame. Yeah. Okay, fair enough. And is there anything particular from a founder perspective that they would need to have ready? So we talked there a little bit around, you want them to have a couple early commercialization. So have a couple of paying customers, whether they're paid pilots or full customers. But is there anything in terms of due diligence kind of coming into that process, building out the data room? What are the kind of core things you would expect them to have just at a basic level for anyone like really new to this?
Great. Thanks. So, when we look at a company in the really early stages, in other words, we've never met them before, we'll ask them to fill out an application form, and that'll ask for a number of things like a pitch deck or an information memorandum, and that will set out the big picture view of what the company is, what it's trying to do, the technology, that sort of stuff. And I imagine that most companies that are raising have got to that point because they need to be able to condense their ideas and their thoughts onto something, into a document that hopefully is coherent for a potential investor to look at. Yeah. Moving beyond that, if we start a conversation with them and then maybe we get to a point where we expose that opportunity to all of our members through a pitch event or through an online recording of that company, then we'll want to see much more detail. So we want to see things like sales forecasts. If the company's premise is IP or technology licensing, we'll want to understand what those patents, what the state of their intellectual property is. We'll want to understand more about the team, the market, the competition. Those things might sound a bit scary to some companies that are in early stage. And what I would say to that is, don't worry, because investors like us who are active in early stage can help hold your hand to a certain extent through those processes. And our angel members who will be engaged and looking at the technologies and the market and the team, they don't bite. They want to help. We all want to find those companies that have that big climate impact that we can help to grow over time, including in that DD process. And finally, I get a lot of nice feedback from companies who go through our due diligence process where something is uncovered that they didn't know about. So we might, we might find a weakness in their IP portfolio, or we might find that the cash flow forecast isn't good enough, or whatever. Mm-hmm. And actually, even with those little negatives that they think they might initially think are, weaknesses in their business, that's actually like a school lesson that they can learn from and make their business more robust just by going through that process.
Amazing. Almost like a mini MOT, right? For their business.
All right.
Love that. Okay, great. So ultimately what you're saying is, if somebody doesn't quite have all their ducks in a row, but they come to you and start those conversations, and some of the gaps that they've got are unearthed through that process, it's not a problem, right? That's great. We've seen you, we've assessed that this is a great potential and we like the idea, but maybe go away and come back to us in another 6 months, 9 months.
Yeah, that's fair. And, we have a paid deal team at Green Angel Ventures whose job is to find and work with these companies and engage our angel members at different parts of that process. And they've all got business, commercial, or scientific engineering sort of backgrounds. And people like me, we've been founders and we understand that journey. And as I said, we're trying to be open-minded and find those businesses that have got those technologies and those cracking ideas that we can all invest in and contribute energy to help fix that big problem. So we're trying to be as open-hearted and as open-minded as we can to help them along.
Right. Perfect. And are there any parts of the climate space, because it's huge, it's broad, right? And we talked a little bit earlier on about some of these subcategories that are already exist within the Green Angel portfolio. But what parts of the climate sector do you think are the most exciting for this year, and where you think there's the greatest potential for growth? I mean, crystal ball gazing, I appreciate, but yeah, anything you're particularly excited about?
Well, you know what? There was a great cartoon I saw the other day, which was two founders talking to each other across a desk, and one of them peers around the monitor to the other one and says, "Hey, all those pitch decks that we've got? Can you replace the word crypto with the word AI, please?" And I thought that was such a nice little gag, right? But the truth is that we are seeing a number of applications from companies that have some form of artificial intelligence or machine learning applied to data. And whilst that's not going to particularly be flavor of the month this month or next month, I think there is a lot to be said for the use of data in helping us solve this crisis. And of course, anything that can process data and take lessons out and take learnings out of it is well worth it. But we are very clear that software alone is not going to solve the world's crisis, that we need to be investing in the difficult hardware systems that are required for growth as well. One great example of the combination of these two software and hardware technologies is a company we invested in a few years ago down in Bristol called Rovco. And what Rovco do is they mount twin video cameras on the top of submersibles that then go down under the ocean, and those cameras take video footage of everything under the sea. And because they've got stereo cameras, their incredible software will produce a sort of a 3D wireframe map of what is down there underneath the sea with incredible accuracy. So you've got this hardware, difficult hardware, right? Cameras that are working under many atmospheres of pressure under the sea, submersibles, offshore boats, really hostile environment. And then you've got this super complex and clever software as well. And that sort of layering of the two of them is a really great example of where we collectively need to move forward in terms of solving the climate crisis. And what they do with their system is they can then survey extremely accurately all of the assets under the sea line of things like offshore wind farms, right? So how much corrosion is there on the legs, the pylons of these wind farms? Is the electricity cable that takes the power from that wind turbine back to the substation, is that in the same place as it was 6 months ago, or has it been dredged out of the way by an anchor or by a fishing net accidentally? And that high degree of accuracy, asset tracking data with a difficult hardware environment is pretty key, really.
Awesome, love that. On the flip of that, do you think there are parts of the sector, you might not want to answer this, parts of the sector where the bubbles burst, right? Or where there's been a lot of hype previously, but actually moving forward, it's probably not the wisest part of the space to invest into?
Yeah, that's a good question. I think if we wind the clock back maybe 3-4 years, something like that, there's a lot of hydrogen startups with huge amounts of differing ways of tackling hydrogen fuel cells, how you generate hydrogen, store it, use it as a mechanism. There definitely is a place for hydrogen in the renewable economy. I think 3-4 years ago, it was people were saying it was going to be absolutely everywhere, and we have seen over time that it's clear that it has a fixed number of applications, but things typically like moving vehicles, the science just doesn't show that creating hydrogen and then storing it and then moving it around it is better than other renewable fuels. So some of those longer term things where science might take a little while to catch up, or engineering might take a little while to catch up with some of the hype, are important to look for. And hopefully that's what we achieve pretty well by engaging our experts and specialist members who are at the forefront of some of these technologies as well.
Yeah, who can sniff that out early and spot that. Yeah. Okay. And in terms of sort of quick plug for any potential or aspiring angel investors that are interested in being part of the growing Green Angel Network, how would they go about doing that?
Thanks for the opportunity. So if you are looking at bringing some investment into this space, then two things you can do. The first one is go to our Angel Syndicate site, which is greenangelsyndicate.com. Click the join button. That'll show you all of the benefits of belonging to our Angel Syndicate network. And then if you would like a more passive way of investing, in other words, putting your money into a pot that is then invested across 10 or 12 businesses across a year, where those 12 businesses are the same ones that our specialist Angel Syndicate members choose to invest in, then you can go to climatechangefund.co.uk and look at our EIS Climate Change Fund. Thanks for the opportunity.
Super easy. Lovely. Thank you so much for that, Cam. Thank you to everybody who's been listening today. And thank you, Cam, for, first of all, joining us and for sharing all of those insights and experiences with us. That's hugely appreciated.